If you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future, and you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million, and what happens is the space goes from 2.5 trillion, where it is today, to, let's say, at the end of this cycle, 10 trillion, maybe 12, maybe 15, depending what the cycle's like, and then on to 100 trillion, which is the size of most of the other asset classes. Like
Raoul, founder and CEO of RealVision, has made one of the most bullish long-term price predictions for Bitcoin and the overall cryptocurrency market. He anticipates that Bitcoin will reach at least $1 million per coin within the next 6 years, which will drive the total crypto market cap to $100 trillion. Despite being relatively new, the cryptocurrency industry has established itself as a unique and powerful force. While traditional bond and stock investors celebrate modest annual gains of 10 to 20%, cryptocurrency investors often see similar returns within minutes. Last November, Jurian Timmer, the director of global macro at Fidelity Investments, highlighted the stark difference between Bitcoin's volatility and other asset classes, including bonds, stocks, and fiat currencies. One of his charts illustrated the risk versus reward ratio for various assets such as gold, cash, treasury inflation-protected securities, USD Global, and the S&P 500 index. When Bitcoin was added to this mix, it became clear that no other asset could compare. Although the chart considered both upside and downside volatility, it showed that cryptocurrency has far more frequent and substantial gains than losses. Raoul is confident that the cryptocurrency market will continue to demonstrate its exceptional growth in the coming years. In a recent social media post, he noted that the adoption rate of crypto is growing twice as fast as that of the internet. He believes this rapid adoption will drive the crypto market cap from $2.5 trillion to $100 trillion over time. Pell further elaborated on these optimistic predictions in a recent interview.
Firstly, decide what your time horizon is. It's the single most important thing. Most people, I can see it already scared of the down cycle to come because they've all got PTSD of the last one. But if you want to go to the OGs of this space, the Dan Moorheads, the Wences Caceres, all of these guys, they didn't give a They just rode it and added into the down cycle, and they've compounded massive wealth. Massive. And there's many people who are not public who've done the same. But most people fear the downside more than thinking of it as an opportunity. Even though it never feels great, I was excited about it in 2020 because it meant I could add to my positions at great levels and compound. So then you get back to an all-time high much sooner than everybody else who's just done nothing. So that's really interesting. And so time horizon is super important. If you just don't want to deal with the downside because your psychology doesn't allow you to do it, that's fine. You need to really think that thing through. Now, what happens is people lose their minds in a bull market and in a bear market. In a bear market, they get rid of all their tokens. They say, never again, this is the worst thing I've ever done. And in a bull market, they end up buying too much shit, stupid shit. And really, to not up the movement from 2.5 trillion to 10 trillion to 100 trillion is to own the highest quality asset and do nothing. Now, we all have an inner degen somewhere within us. So allow yourself a bit of space to do that. You know, I've got positions in dog whiff, hat and bonk and, you name it. But when I look back in my portfolio, it's probably 1%. But I look at it on the screen all day. I'm checking the whiff price all day. It's ridiculous. It's 1% because the rest is just a buy and hold long-term position. And then I see a lot of people trying to be overly cute by saying, oh, I'm going to own this underappreciated crypto like Cardano or XRP or whatever. Fine. But you're taking a risk that they're not going to appreciate the same as the proven asset. Now, the proven assets keep trending. If I look at the compound rate of growth, the annualized rate of growth, Bitcoin's 150%, ETH since 2012, ETH is 180, about 160, 70%, something like that, since 2015, 16. That's per year. I mean, this is bananas returns. And then Solana's like 200. And that was a snapshot in February before. I mean, many of these aren't at all-time highs yet. So the returns from just owning the top assets is so good. Now, I also understand that a lot of people may only have 10 grand worth of savings. So they think, well, even if Bitcoin goes to 1 million, that's a 14x. So I've got 140 grand. Can that even get me a deposit on a house? Is that a retirement saving? I get it. So people really want to take more risk, but just do it intelligently. And that's how not to this up. Because if you turn your 10 grand into zero and you do it every crypto cycle, which many, many, many people did, the NFT cycle destroyed a lot of people, and a lot of people got destroyed in just all of the kind of super early stage speculative stuff. We've all got wallets of shame, so it's not like any of us are any better. We all have the wallet of shame. And don't use leverage is the other one. That's the other thing that people tend to do is they love getting a yield. I don't see the point. So yields have risks. They come with a risk. Even staking yields, it often means if you're not liquid staking, you've locked it up. If it's liquid staking, there's the risk of the platform, of Lido or whoever else going under, or something happening, right? Something unexpected. And in crypto, something unexpected always happens. Having leverage on a 70% volatility asset class is a very, very dangerous thing. Most likely, you will lose control of your coins. Your one job is not to lose control of your coins. That's why storage is super important. Your one job is not let go of your coins. Keep it for that 5 or 10 year bet, and your future self will thank you forever for doing it.
Raoul Pal's key strategy for those looking to capitalize on the cryptocurrency industry's potential is to play the long game, avoid leverage, and ensure that major cryptocurrencies like Bitcoin, Ethereum, and Solana constitute a larger portion of your portfolio than riskier, speculative investments. He strongly warns against using leverage, emphasizing that it's the quickest way to ruin what he considers the best investment opportunity ever available. Pal, a former Goldman Sachs executive, believes the world is on the verge of a comprehensive technological overhaul that will transform every aspect of the financial system. He cautions that we may have only 6 more years of these incredible opportunities before the world becomes completely unrecognizable. He elaborates that only those who seize the opportunity now will be able to relax with their substantial gains while the rest of the world scrambles to adapt. Here are more clips from the video for further insights.
I bought Bitcoin at 200 in 2013. It went up to 1,000. Then it collapsed 87%. But I had a long-term time horizon. I'm like, fine, it's an option, whatever. I didn't put a huge position on, but it was decent enough. And I just didn't look at it for a while. I followed it, but I didn't worry about the P&L because it's like the bet goes on over time. It's an option. And eventually I sold out mistakenly in 2017 when things were starting to get crazy. I was up 10, 12x, 2,500. They had the Bitcoin forking wars. I didn't really understand what was going on. And I wanted to be clever, overly clever. So I took profits. I thought, I am clearly George Soros. I've just made a 10x and, wonderful. It went up another 10x in the next 6 months. I mean, people don't remember 2017. They're still scarred by the last cycle. But 2017 was wild what happened at the end of that cycle. So, it went from 2,000 to 20,000, then fell 85% again. And I didn't get back in until that sell-off after COVID. That was my signal, and I got back in. Traded well, bought the down 50% period, everything else, in it, locked and loaded, massively got a much bigger position than I did the first time around, have been in ever since. I went back, and I should never have done this. I went back and said, I wonder if I just kept my original position and did nothing. I'd have done 5 times better. And then I thought, okay, what happens if I did what I was supposed to do, which was, let's say, double that original bet that wasn't so big that you couldn't do that. Just double that, just add that same amount in within 40% of the low. So you're giving yourself tons. I'm not saying, you're going to catch the low, but you got 40% wiggle room to somewhere get around the low. So that's dollar cost averaging around in a bear market. I'd have done 25 times better because that's compounding. And that was a stark lesson. My working thesis now is you've seen me post in the past charts of the adoption of crypto. So we use active wallets. Now, we know they're double counted, but we're comparing it to the internet, which was IP addresses, which are also double counted. So it's fine, right? It gives you the rough rule of thumb. There's about 520 or 550 million wallets, active wallets out there. It's growing at twice the speed of the internet. So this is the fastest adoption of any asset class or technology the world has ever seen. Technology side's just been beaten by AI, just because Microsoft and other things can install it everywhere instantly. But it's massive because it is an asset and AI is not an asset. So if you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future And you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million. And what happens is the space goes from 2.5 trillion, where it is today, to, let's say at the end of this cycle, 10 trillion, maybe 12, maybe 15, depending what the cycle's like. And then on to 100 trillion, which is the size of most of the other asset classes like equity. In fact, most of them are larger than that. So that movement from 2.5 trillion to 10 trillion to 100 trillion is the trade. And that also happens to be the fastest, largest accumulation of wealth the world has ever seen. Nobody's ever seen anything like this before. It's an equivalence to the entire baby boom generation entering into financialization, buying stocks and stuff like that, plus the opening of China to the WTO, plus the Iron Curtain coming down in Russia. It's of that magnitude of wealth generation in one short period.
Raoul Pal's long-term prediction of a $100 trillion market cap for the cryptocurrency space is as optimistic as his short-term forecast of $10 to $15 trillion for this cycle. This implies a 3 to 5 times growth from the current $2.5 trillion market cap. Applied to individual cryptocurrencies, Bitcoin could potentially surge from its current range of $68,000 to $70,000 per coin to a range of $280,000 to $450,000 by the end of this cycle in 2024. Similarly, Ethereum could aim for $220,000 per token. What are your thoughts on Pal's predictions and analysis? Feel free to share your insights and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.